Good morning everyone and welcome to the Trade Talk podcast. Today we will start with news flow from the US markets, especially if we go through with the comments from Mr. Powell. Then he said a rate cut could come as soon as September. And officials said they are watching risks on both sides of the Fed's mandate, putting jobs into focus alongside inflation. They also noted some further progress on getting prices down as the labor market cools. If we go through with Asian markets, then they are trading with mixed sentiment. In fact, Japan's Nikkei is down more than 3%, and it is mainly because of sudden rise in the Japanese yen. On the back of they are going to increase rates by 25 basis points. So it is around 149 levels. It was around 163 levels some 15-20 days back. So it is consistently appreciating, and increasing interest rates is something which is going to increase some pressure on equities. So maybe because of that we are seeing some weakness in Japanese equity. But if we go through with Asian markets, then they are trading with mixed sentiments. GIFT Nifty is trading nearly 70-75 points higher as compared to its previous close, while US stock futures are also trading in the green. So while looking at the entire setup of the market, we are of the view that global macros are favorable. Crude is at $81-82, but 10-year bond yield is now at 4.05, which is something really positive for our markets to attract FIs investment. Dollar index is also around 103.9, and our currency is consistently depreciating. It is around 83.72 levels. So while looking at the entire setup, we are of the view that our market should open higher, but at higher levels we are expecting some profit booking as we are retracing to extreme levels in the near term. 25,050, 25,125 or 150 going to act as major resistance for the market in the near term. Ideal strategy should be to look for reducing long positions between 25,050 and 25,125 levels. At the same time, if we see any correction during the day, then again 24,750, 700 going to act as major support. So we are not expecting market to break the range so easily, but yes, about 25,000 we can expect some 100-150 points of rally in the near term. But in that, try to reduce long positions or take some profit on long positions. Also, if we go through with Bank Nifty, then there also we saw range bound activity, but yesterday's activity was the narrowest of last 9 days, which is something indicating us that we are going to see breakout sort of formation in the near term. 52,000 is the barrier, as well as 51,000 going to act as major support for the Bank Nifty. Bank stocks are recovering from their lows, so we can expect upward breakout, but broadly we are of the view that let the Bank Nifty break its range and then we can look for taking some positions. Metal stocks did well on Wednesday. Most of the stocks recovered from the lows. We are expecting further more activity from these stocks. From the IT basket, Infosys is going to remain under pressure because of specific news flow, but otherwise other stocks are showing some strength, and there we are expecting further more activity. That's all from my side for the day. With this, I'm ending today's morning podcast. Thank you very much for listening me, and have a great day to all of you.